Hello, I am Joe Gill with My Phoenix Real Estate, and we're going to do a quick review of what the market's doing as of May 23rd, 2023. So let's get right to it. Um, Here's some commentary from the Cromford Report. This is a good visual to take a look at what's happened to the prices, right? This is monthly average sale price per square foot, right? So it's not perfect, obviously, but it's going to give you a lot of information and give you some context to people saying prices have dropped 20%, prices have appreciated 5%. Well, compared to what and for what segment? And, so this is for Phoenix. This is the greater Phoenix area through Armless, Arizona Regional MLS. You can see all of these previous years, 2019 is green. These all increased at a relatively, moderate pace, right? Year by year, we're getting some increases. Then all of a sudden in 2020, we saw what we saw, things did what they did, and then we scooped higher and higher and higher. 2021 is probably the biggest year start to finish that we saw. So in the beginning, it was at 210, and then it finished up right around 255, 256. Now, when we hit this kind of mustard yellow line in 2022, we peaked on our closed sale prices, and then we started to decline right in about June. This is where you saw the drop. This is where we had prices reducing, right? Then we picked right back up this year in January and have started to climb since. We've got some spikes and some changes, but it's on a relatively positive pace, right? So when people say, the crash happened, well, that was your crash. You can see it on paper right here. The difference between all these three is probably the biggest thing to know. Now, will we scoop right back down and get to 2020 prices, which is $1.80? I mean, probably not. I doubt it. Maybe. Maybe don't bet on it. So here's an active look at the Cromford Market Index. This is the future looking, this is the forecasted sort of direction that the market's going based on several different factors within the market. As you can see, we caught this mustard yellow as 2022 last year, and we said, ooh, things are not looking great. We saw that right in about February and March. Things were starting to get a little bit softer as those rates were going up. Then, we rode that little roller coaster ride down, and then we caught our breath, and now we're getting composure, and now we're cranking back up, right? So are we going to enjoy some swoops and some flows, or are we going to crank up another hill so that we can ride down again? It appears that this has been increasing kind of at a decently moderate pace. And then the last, I would say, couple of months, this index has turned up, and the acceleration looks a little bit higher than before. This is due to active. Let's do hopefully this refreshes. There we go. Active listings. They have steadily been in decline for a couple of reasons. One is that the demand has spiked and people are buying those homes that are for sale. Another is that fewer people are actually listing their homes for sale. So as of now, we are not seeing a turnaround in the active. This is the amount of water that's in the bathtub that people could go buy. Here is the demand. This is the number of contracts that are being written. This is the number of listings under contract. That means buyers are out there putting a contract on a house. They want to buy it. Seen a little decline. We made it up to 9640. And then we have kind of declined down to 9,242. So we'll see if that continues this sort of seasonal dip that we normally see, or if it's going to come down and go below that seasonality, right? So we might see a dip, get in 9,000s, maybe the 8,000s, and then if it ticks back up to the 9,000s later part of this year, back when the buying season, September, October through about December, we'll see what that does. Here is the number of new listings. This is why we're seeing those listing counts reduce. 7,500 in January, 7,300 February, 7,900 March, 7,200, and then we got one more week left of this month. So if we break 6,000 something, I'd be surprised. Well, 15, 30, 45, 6, yeah, we'll probably be right in the mid 6,000s. You can quote me on that. We'll see next month. But because of this, you can see that there are pretty massive differences between the last couple of years, the number of new listings going on market, and today, right, this year, we don't have a whole lot to work with. That's kind of a good thing for sellers because that means that the demand that we're seeing right now, the number of buyers that are out there looking for homes, isn't being lost in the massive amount of new listings going up. So you have less competition. So here are the contract ratios. This is sort of imagine that buyers and sellers are playing tug of war. Each are pulling their respective ways. And the contract ratio is the flag that's in the middle. This is telling you kind of who's winning. Who's winning a little, and the game is not over. It's a never-ending game, but who's doing a little bit better. So I would say anywhere between like 20 and 40, it's kind of tied. It's right there in the middle. That's what you're going to see in the beginning of the game. Earlier this year, we saw these lower contract ratios start to increase and get better. So now it's better for sellers, worse for buyers. So that means more buyers are out there putting homes under contract for each home that's available. That's what that ratio represents. So right now, we took a little dip. We went from 83.9 to 83.5. So we'll see if this contract ratio continues to shrink and stay in the hot market area, or if it goes into the maximum, up into the frenzy once it gets over 100, or if it dips down closer to 50 and it's just a warm seller's market. So we'll be watching that through this summer. As of now, the environment is that buyers really do have some competition to find something good, and they're having to compete over it. So this is the number of closings per month that are above list price. You go list your home for $450, somebody's willing to buy it for $470, right? So 20% of all of our homes, 19.1% of all of our homes closing in the past 30 days are closing for more than they were listed for, right? You can see the number of here, that's mostly as far as like unit volume. We've got most of those between $300,000 and $500,000. Got between 3 and 4 here, you got 1811. Between 4 and 5, you got 1500. Now, if you want to see that represented as a percentage of those price points, then this graph is going to be a little bit more telling, right? So 30% of all homes that were listed between the price of $200,000 and $250,000 went over asking. Right? Obviously, nobody can find something for $200,000. It's a cheap house. And then it reduces, kind of slides down. And let's see, right here at H, let's say 700 to 800 range, you're still at 14% of those listings are going for more than they asked for. You have a little dip between 1 and 1.5 million, then it spikes back up. Between 2 million, 2.5 million, 18% of those listings that recently closed we're closing for more money. Now, this is listing success rate by calendar month. This shows you what are the chances of you listing your house and it closing, right? Take all the listings, how many of them close, how many get taken off the market or canceled. 84% are going to close. That's the probability that you have. It was up at 93% in the peaks of the recent crazy boom years. Then it dipped down to 63%. Now we're back to 84. I assume that will climb as long as people are being realistic, and we're also enjoying some continuity, some sort of predictability in the market, right? That has a big factor in whether your listing is going to be able to close. Mortgage rates, we're finally kind of settling down. We had this little scoop up, but now it looks like we're stabilizing right around the mid-sixes. So as long as people know what to look out for and they can predict and plan, I think we're going to have less volatility in what we're seeing. So if you're a buyer, you got some competition, you better get out there. And if you really like a house, you might have to pay over. If you're a seller, pay attention to your data, make sure that you're competitive, and you're going to be able to sell. If you want to cross your fingers and price high, maybe talk to a different realtor. That is not me. I don't run that strategy. So if you guys have any questions, feel free to give me a buzz. We can talk about it.